Very good. Hey, everybody. My name is Jeff Gibby. It's good to see everybody. Thanks for, I hope you're doing well. I want to say thanks for the festival, for having me, for letting me be part of it. I just said, and hopefully I won't get overly redundant, but my name is Jeff Gibby. Just to give you a little bit of introduction to myself, I've worked here for very close to 30 years. So we were doing a little bit of math just earlier, and I started in '98, which means it's 26 years. So in any case, before I get too far into this, I'm going to go ahead and read a legal disclaimer, and then I'm going to talk about what I'm going to talk about. So today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by the investors who are aware of the risk. I've only said this 3,000 times. I just kind of lost track of where I was. Should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for investment decisions based on the use of the software, trading strategies, or information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. So with all that good stuff being said, I hope you're doing well. Thanks for being here. Thanks for watching. If you have questions, I've got the questions open right here. Make sure to ask them. If there's a symbol you want to look at, type it in because like what I do like to do when I'm kind of in here presenting, I like to actually just kind of look at symbols that I haven't pre-picked. And so today we're going to kind of do a little bit of talking about kind of like the importance of having a system, understanding a system, and all that kind of stuff. As I said just a minute ago, 26 years ago, I started here at MetaStock. I would say a few things about MetaStock. It's a great company to work for. I absolutely love it here. I started in inside sales. That means if you had questions about the software or your trading or kind of how our software can help you with your trading, you'd pretty much talk to me, and that's kind of what I did. From that point, I did that for about 10 years. I very, very much enjoyed it. After that, I kind of went into kind of like what we call our business development team. And a lot of the people, I know Vince Ford was here a little bit earlier. I've worked with Brett a lot over the years. Generally, kind of set up a lot of the events that we do here. It's been a lot of fun. I've learned a lot, just like being able to kind of talk to some of the best people in the industry. And then I still do that. I'm still in charge of that. I also am in charge of kind of like our sales team and that kind of stuff. So that's me. I won't go too much further down there. And I really don't want to kind of read too much of actually this screen either, because you're not here to kind of find out about MetaStock. It is a software that's been around for a number of years. I'm going to kind of talk a little bit about kind of how you can use it to evaluate strategies and see how it's helpful for you, that kind of stuff. But the one thing I do want to talk about with MetaStock is, it's been in business since 1982. One of the things we're super, super proud of is, I think on this next slide, 31 years in a row, it's been rated the best software in its price category. So today, I'm going to kind of sit down. I'm going to talk to you. Here's the agenda that I have for today. And I hope you don't mind. I'm going to fix my PowerPoint right now. I just noticed that it has a little bit of an extra bullet there. So, and also, I don't know if you can hear that rain, but it all of a sudden just started pouring here in Utah. So, anyway, what I want to talk a little bit about is like the importance of trading plans. And to do that, what I want to do is kind of help you understand a trading plan. I'm going to actually teach you the MACD indicator. I'm going to talk to you a little bit about how it's calculated and 3 popular methods in terms of the way that you can use it to identify trades. We'll talk about testing different trading methodologies and how that works, and then also how to scan for trades. So those are kind of what we'll be going through and that kind of stuff. Okay. Richard Dennis is the guy that's on the screen right here. Richard Dennis, basically, if you don't know who Richard Dennis is, he was actually nicknamed the Prince of the Pit. And a very, very successful, very prominent trader. back in the 70s. He was one of the turtle traders. Actually, I have some notes here that I'm going to kind of just go to. He borrowed about $1,600 and reportedly made it into about $350 million, and he did that in about 6 years. I swam with him back in the 80s. He believed he could teach trading. So he had a bit of a disagreement between him and a guy by the name of Bill Eckhart. And this is kind of the foundation or the formation of what was called the turtle traders. Richard Dennis believed, I can teach people how to trade. It's fairly straightforward. What we do is they had a very, very systematic rule set. In fact, it's built into MetaStock, but they basically looked for, if I could boil it down into a simple sentence, it was a breakout system. So they're looking for kind of stocks or actually futures. They did this in the futures bids, but they were looking for futures to break out, and when they did, they had a very, very specific rule set around how they traded it. Now, Richard Dennis said, I think we could teach a methodology on people how to trade, and they could duplicate it, and this would be something that would be useful and that people could use. And then his friend Bill Eckhart disagreed with him. Bill Eckhart said, no, not a lot of people have the mentality and the methodology and kind of the mentality required to actually kind of employ risk management strategies, to be disciplined enough. It's not something you can teach. And so they had a bit of a disagreement. And so that is where they actually did the turtle traders kind of contest. And so I'm going to go back to my notes here. They got together a group of 23 traders. There was 21 men and 2 females, and they funded them with their own money. And what they had is probably one of the most successful experiences in trading history. They taught everybody how to trade. If people would follow the rules, they kept them in the program. If not, they'd eject them. And over the course of the next 5 years, they made an aggregate profit of $175 million. So that's the story back behind the turtle traders. One of my favorite quotes in trading is, I always say you can publish my rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. So I have a question for you guys. Aside from symbols, if there's a symbol you'd like us to look at and kind of teach with, let me know in the comments right now. But out of the options that you can see right here on the screen, what is the best profession for trading? Would it be a teacher or an educator, an engineer or an architect? Terrence is already coming in with C, psychologist. Pilot, performer, artist, musician. What do you think is kind of the best one? Terrence, I like the answer of psychologist. It's not the exact answer that we're looking for, but I like the answer of psychologist because actually I know a few in the industry that are very great technicians. For example, Alexander Elder is a psychologist. He wrote a book called Come Into My Trading Room. I'm going to talk a little bit about him in a minute, but very, very super talented technician. It's actually started as a psychologist or psychologist. I don't remember exactly what. The other person was, that I know that's a really good psychologist, is Jake Bernstein. And we do a lot of work with Jake. Very good technician, does a lot of futures, that kind of stuff. And that's also a very, very, so I think there's some truth to that. I think there's some truth to understanding psychology and being able to trade well. But the actual answer is Bill and Alex's a pilot. And I think that's interesting. Actually, Chuck Hughes, if you know Chuck Hughes, very, very popular technician. He's a pilot. We just actually got back. He comes into the office once a year, and it's a gentleman by the name of Greg Morris. He always kind of visits the MetaStock office when he's in town. And we just took him to lunch. He was a literal Top Gun and did a lot of candlesticks work. He had a book that analyzed the statistics of candlestick patterns. Ended up, at the end of his career, he's retired now, but he ended up managing about $19 or so billion as part of Stadium Money Management and a fund manager. And they were both pilots. So the interesting question, and I'm going to pose this to you, you don't necessarily have to answer it because I'm going to in just a second. But the interesting question is why? Why would it be an airline pilot? And the assumption here for the answer for that is I'm going to say that is the discipline. When a pilot takes off, they know exactly why they're taking off. They have a whole list of rules that they're going to follow in order to get that plane off the ground. And the same thing when they land or when there's an emergency and all that kind of stuff. There's not a lot of stuff that they leave scripted. They have it all worked out towards a plan. So what I want to kind of talk to you a little bit about today is a plan. A lot of people, it's been interesting to me over the 30 years that I've worked at MetaStock, is a lot of people will start trading and they won't have any idea of why they're trading. They'll just take advice from like some dude on Reddit. Sometimes that works, sometimes it doesn't. They'll take advice from just they don't know what they're doing and they just jump in. And the thing about trading that's kind of nice about it is, you don't have to buy anything. You can always say, well, okay, this is a strategy that I want to use. How does it work? How well has it worked? If I bought when it gave a signal, what is it going to do? And kind of the ability to kind of go in and do that. And then when you start trading, if you start to like something, you don't have to necessarily go big. You can buy small positions. You can buy single shares. You can kind of play with it. And as you get more comfortable with what you're doing, you can get in there. And so one of the things that I'd encourage you to do, especially if you're new to trading, is take it easy. There's nobody that's requiring you to trade. So use solid money management, know where your stops in, know why you're getting in and out of a trade. And so from that perspective, what I want to kind of talk a little bit is different trading methods, how you can kind of understand how they work. And I think the best way for me to kind of actually explain how they work is to talk to you about how one of them works and get really specific about that. So let's go ahead and get started. Gerald Appel right here is on the side, developed the MACD. So we're going to talk a lot about MACD. I'm going to talk a little bit about how it's actually put together, how it's calculated, and again, I'm going to go into 3 different ways in terms of how you can use it to kind of identify trades. Okay. Gerald Appel wrote the MACD over 40 years ago. He wrote 17 books on investments. He published a newsletter. Very, very good technician. And one thing that I'd like to put in the bio, when I talk about him, he did 5 books on actually photography, which I thought was kind of cool. So in any case, there's some things that I like to talk about at MACD. The reason I kind of talk about MACD in general is I find a lot of people use it, but they don't know how it's constructed. They don't really kind of understand the mentality behind it. The other reason I like to talk about it is because it's very, very popular. People really like the MACD indicator. So there's some advantages to the MACD. It's objective, so we're not ever going to be kind of making guesses here. It's either bullish or it's not, or bearish. It's either given a signal or it's not. It's not anything that we're kind of going to be looking at that's subjective in any case. It's pretty easy. As a result of being objective, it's also pretty easy to interpret. The 3 rules I'm going to kind of share with you are very, very simple. And then helps you to trade in the direction of the overall trend. A lot of people talk about, trade with the trend, or the trend is your trend. The trend is your friend until the end. The MACD kind of gives you an idea of kind of trend, but also momentum. And we'll talk a little bit more about that as we talk about it and how it's constructed. What stocks do you want to look at? William, Terrence, Alex, is there anything that you want to look at? Because we're going to be looking at stocks in just a minute. If you have a symbol that you'd like me to kind of look at, go ahead and type it in the chat. It's totally fine. If you don't, we'll go with something that I pick. So in any case, some disadvantages of the MACD, it's a bit prone to whipsaw, and it can be a lagging indicator because it's based on moving averages. So those are some things that you want to be aware of when TSM, you got it. Thanks, Greg. Appreciate it. So let's go ahead and kind of talk a little bit about MACD a little bit more and kind of how it's calculated and that kind of stuff. We'll start with like the main MACD line, then we'll talk about the signal line, we'll talk about the other one. Now, when Gerald created the MACD, he calculated the 0.075 exponential moving average and a 0.15 moving average. He didn't use whole numbers. The closest, they don't actually line up with exact whole number EMAs, but the closest one would be like a 26 period and a 12 period EMA. So let me go ahead and open up, and thanks to Greg for the symbol, I'm going to open up a chart of TSM. Let's go ahead and jump over to it. And we'll just talk a little bit about the construction of kind of the individual lines of the MACD. So for right now, I actually think it's a little bit more visible if I change this to a white background. So I'm just going to go into kind of a white background. Hopefully you can see it a little bit better. For me, I think it's a little bit more visible. And that could just be a personal preference, but I think it's a little bit more visible when you see it on the chart. Now, if I wanted to kind of just talk to you about the MACD, this right here is the MACD line. Okay. If I wanted to tell you how to construct that, what I'd say is, well, the easiest way you can construct it is we're going to take a couple of moving averages. I'm going to throw them on the chart. We're going to do 26 period exponential. There we go. And I'm going to do a 12 period exponential moving average as well. Okay, 12. Okay. And just for the point of clarification, I'm going to come in here. I'm going to just kind of make them a little bit thicker. Okay. I'm going to make a note to pay attention to time as well. I don't want to go long. I got 7 extra minutes, which is a gift, but I'm not going to take 7 more than that too. So let me go ahead and click on OK. All right. So you're looking at, when you look at the MACD, you're looking at the difference between this shorter term moving average, and in this case it's at 12, and it should be an exponential, so I'm going to make that correction real quick, and this longer term moving average, which is a 26 period exponential moving average. Okay, so and what that's going to give you is basically this MACD line right here, and just so you can see it a little bit bigger, I'm going to come in, and the line I'm talking about I'm going to make really fat. Okay, so this big yellow, goldish, yellowish line, that's the MACD line. And what it is, it's the difference between the shorter term moving average and the longer term moving average. Pretty close to the difference, okay? Because remember, they're not exactly 12, it's not exactly 26, but it's pretty close, okay? Now, because we're comparing two moving average systems, we're comparing a shorter term moving average and a longer term moving average. So if we're, let's kind of go back a little bit on TSM here and just talk about what that means. And this might be a little bit basic for you, I apologize if it is, but we'll just talk a little bit about what that means. If we're in a stock that's in a nice big uptrend, your moving average, your shorter term moving average is going to be trending above your longer term moving average. And that's all it's going to mean, right? And so anytime that you're kind of in an upward trend like you have been in TSM up until, looks like July 16th of this year, you're going to have a positive MACD. It's not until it starts to trend down. When it starts to trend down, you're going to notice that that crossover happens and your MACD is going to cross down below 0. So already we're kind of looking at this in terms of in terms of the disadvantage column, you're looking at moving averages, so it is going to lag. Here, I'll do this, Alex, and hopefully you can see it a little bit better. I'll get my face out of the way because I know that will make GoToWebinar bigger, or the actual screen bigger, and hopefully you can see that. And if not, I don't know that I can make it bigger than that. So I can make things a little bit bigger though. So hopefully that's helpful. I get bigger on the screen anyway. So if we're in an uptrend, we're going to have a positive MACD. If we're in a downtrend, what's going to happen is a shorter term moving average is going to cross down below the longer term, and you're going to get a value that eventually goes down below 0. Okay. Now, since you're looking at kind of the difference between two moving averages, I used to always make the mistake of calling MACD a trend indicator. And it certainly is a trend indicator. I'll show you how you can tell if it's bullish or bearish in just a second. But it's also a measurement of momentum, because if something's really taken off, the more it's taking off, the bigger the value is going to be for that MACD value, okay? If it's a little bit flat, I'm going to argue that like right here, maybe we're a little bit more flat, you're going to have a MACD that's a lot more shallow. And actually, this has been in a trend for quite some time. But when we get to a point where we're flat, what you end up getting in this is a MACD that's more shallow. So it does a pretty good job of measuring momentum as well. So right now, all we're talking about is this gold line, the MACD line. And that's all you're talking about, is the difference between this moving average and this moving average. Okay. So let's talk a little bit about this line here. Gerald Appel called this the signal line. Okay. I'm going to go ahead and kind of do this. The signal line is very simple too. Very, very simple. It's just a 9-day exponential moving average of the MACD difference. So, and it's called the signal line. So it's usually dotted. You can see a red dotted line here. I'm going to go ahead and make that bigger too. just so we are very clear about what an indicator I'm talking about, we'll go ahead and click on apply. It is still dotted. It's just it's just a bit fatter. If I was just to take this gold line and apply an exponential moving average to it, what I would get is a 9-period exponential line. Okay, and that is the line that Gerald called the signal line. Okay, and he called it a signal line because you can use it as a signal. If the way that you read this signal line is if MACD is trading up above its signal line, you're in a bullish phase for MACD. Okay, if it comes down below its signal line, as it did for just a couple of days here, you get bearish. Okay, if it's trading up above its signal line, you're in a bullish phase, bearish phase, bullish phase, bearish phase. Okay, so and that's the way the signal line works. It kind of tells you, okay, we're going from a bearish phase in MACD to a bullish phase of MACD. And the reason Gerald called it a signal line is you can use that as a signal to get into the market. So you see right here, every time that crossover happens and it goes from bearish to bullish, you get a buy signal on the chart. When the cross down happens, you get a sell signal. Okay, and when the buy signal happens, you get a buy signal. Okay, and so that's why he called it a signal. And for this, because it's objective and because it's based on kind of the trend of the stock, we can go back and say, well, okay, how does that work on TSN, right? And if I can say, well, okay, I got this buy signal here. Maybe we got that at the end of the bar. We bought here at the bar open was 140. So let's call it 140, okay? And then we kind of held it until we sold here, and we sold at 151. We can say, okay, well, that made us 11. Okay, if we went short there at 151 and then ended up buying it again at 164, we'd be down some points, right? We'd be down about 13 points. We'd be down -2 points. But we can very, very objectively say, well, does this work well? Does it not work well? It kind of allows us kind of the ability to kind of use an objective method to trade the stock. And so that's one of the things I like about technical analysis. We're kind of studying the chart to see if we should be buying or selling. So, Monica, I'm just using the built-in MACD settings. With the MACD settings, we use the ones that Gerald was using. Thank you for the question, too, by the way. Then the question, in case you can't see the questions, is what are the MACD settings? So these are just the ones Gerald created. And they use basically the 9-period exponential moving average, which you can change. And then it doesn't use the whole period moving averages. It actually calculates this 0.75 and the 0.15, the original moving average, the original MACD settings that Gerald used. Now, I do want to say that's what I'm using to show you the MACD, Monica. You can change them if you want. You can use different settings if you want. It's up to you. I'm just using kind of like what he initially created with the MACD. Okay. All right, before we kind of talk about the ways to look at the MACD, I want to talk a little bit about the MACD histogram. It's a recent addition to the MACD. It was developed by Thomas Espray. The MACD histogram is just the MACD value subtracted from the signal line. So I'm going to kind of talk a little bit more about what that is. If I was to take the signal line and subtract the MACD line from the signal line, what I'm just going to get is this histogram value. Okay. As, some people, you can only, if you want to and prefer, you can only look at the MACD histogram to look at your decisions, because you can always tell where the cross is. The cross is going to happen when the histogram crosses below 0. But all you're looking at is the relative difference between this line and this line. So that's it. Okay. And if you prefer to look at it that way, you can. That's all it is. And Thomas Asprey actually looked at that. Actually, when when Alexander Elder is looking for MACD divergence, which I'll talk about in a minute, he uses the signal line, or the MACD histogram, this little line there, the one that's a histogram. So, all right. So let's talk, that's it in terms of the way that this particular MACD works. It's looking at 2 moving averages. You compare the difference. You take that, you apply a moving average to determine if you're bullish or bearish. And doing that, you can basically, there's 100 different ways you can look at MACD. I think it's important to understand how it's calculated, because I think that helps you understand kind of like the pros and the cons of any particular indicator that you might be using. So, as I said earlier, the MACD is a trend following system, but it's also momentum. And I want to cover 3 common uses that you can use for MACD. Okay, so let's go ahead and kind of talk about 3 common uses for MACD. There is a star here I used to have that I will discuss because there are hundreds that you can look at. We're going to look at it for trend identification. I already talked a little bit about that. You can look at it to kind of overbought, oversold readings on a chart, and then divergence. So talking about trend identification, very, very simple. If we're looking at this chart of TSM, if our MACD crosses above its signal line, we're going to enter that bullish phase as we did right here. I'm going to zoom in a little bit so we can kind of see everything a little bit clearer, right? But if the MACD crosses up above its signal line like it did right here, it'll go from bearish to bullish like it did. You'll get a buy signal, which just MetaStock populates on the chart for you, okay? When it comes up and eventually starts to kind of taper off, you get a bit of a pullback. That's when you're likely going to get a MACD sell signal. That just means that the MACD has pulled back below its sales signal, and then you go from bullish to bearish. This happens a lot in the markets. They don't go up in a straight line all the time. That would make it too easy. But here you kind of get that sell signal as shown on the chart. That sell signal didn't work out. You get a little bit of a buy signal and then a sell signal. Okay, so that's the first method. Are you bullish MACD? Do you expect price to go up? If you're bullish, it's going to be a good time or a good opportunity potentially for you to buy. If you're bearish, be a good time to get out of a chart. And this should be pretty simple. Hopefully it's simple. If it's not simple, if I'm not doing a good job of it, it's because I'm not doing a good job of explaining it. Another common method for MACD is to look at the MACD to see if it's overextended. Okay, if it's overbought or oversold. Okay, if it's overbought or oversold, we might start to say there is a reversion to the mean possibility. And the more that it gets overbought and oversold, the more likely that it is to be overbought or to have a reversion of the mean type of an indication, right? And the way that we show that up in MetaStock, and I want to kind of caution you, anytime that you're using an overbought or oversold indicator, whether it's MACD or stochastic or RSI, I would recommend that you use it in conjunction with something to confirm, because if you've watched markets for any amount of time, you know that just because something is overbought or oversold doesn't mean it's going to reverse, right? Like markets can stay irrationally overbought and oversold for longer than you can stay solid. And so, but if we kind of start to look at kind of the way the chart kind of looks here, you'll notice these blue bars. I'm going to make these bars a lot bigger. So give me a second, just so I don't think you can see them very well because I can't see them very well. I'm also blind in both eyes though. So, but right here you'll see like you have your standard green bars. These can be candles. It doesn't matter. It just has bars on this template. But you'll notice like here we start to get blue bars. Okay. And what this signals to you is that the MACD is entering that overbought, oversold territory. Okay. And if I go into the commentary, which I'm going to do, excuse me, I got to make my phone stop reminding me that I need to be doing a webinar right now. But if I go into the commentary, let me go to view expert commentary here. And what I'm going to do is just kind of explain to you what this is doing. So this is doing its best to explain MACD to you, right? Here you've got an arrow. I'm going to move this to where there's a blue bar, just so I can kind of talk about that. And this commentary is looking at this bar. That's all it's doing. It's just kind of giving you an analysis of the bar that you're looking at. So right here it says the MACD is currently bullish. Okay, it's been bullish since it crossed right here. We're looking at here, right? The MACD is overbought in an overbought range. Prices may continue to move higher for some time. Wait for prices to move lower before considering a short position. Okay, but that's the second way you can look at MACD. Am I overbought or oversold? Now, since we're looking for a confirmation, if you get into an overbought or oversold territory, I never use that as a reason to get out of a trade personally, but I might use that as a reason to get more protective, use a tighter stop, something along those lines. So here you've got anyway, I lost my train of thought in terms of what I was talking about, but let's talk about the third way that you can look at MACD, and that's what you would call MACD divergence, okay? With MACD divergence, a great technician, if you haven't read his book, Alexander Elder, he wrote a couple of them. Come Into My Trading Room was awesome. And both of his books were really good. I can't remember the second one, but Come Into My Trading Room, both of them are really, really good. He kind of talks a lot about kind of the very, very good technician. Does a really, really good job. But he calls divergence in indicators the most powerful signal in all of technical analysis. All right, and so that's why I kind of talk a little bit about this because, and he calls MACD divergence the most powerful signal in all of technical analysis as well. And so I'm going to talk a little bit about how he defines divergence and how you can kind of look at it on your chart. I actually see a pretty good example here. Okay, and so what I'm going to do, one of the things that Dr. Alexander Elder kind of talks about in terms of finding MACD divergence is you'll typically look at either, if you're looking for like divergence, you look at the peak of the MACD histogram here. You'll want it to drop down below 0 and you want it to set a new peak. Okay. What I'm going to do is I'm going to grab a little bit of what we call a measurement tool in MetaStock. So I'm going to grab this tool right here. I'm just going to measure the difference between those two peaks. Okay. So between those two peaks, there's about 15 days. It's about 44% lower. When with MACD, that's not a huge percentage because it does fluctuate quite a bit, but there's definitely, if I was kind of going to say, well, with this trend line, this peak is objectively higher than this peak. It's not a very hard observation to make, right? Now, if I kind of compare the price movement during a similar time, let's go ahead and look at the peaks again. I'm going to go ahead and close this commentary for right now. But let's go ahead and look at the peaks here. If I look at this peak right here, this is the highest price at about the same time MACD peaked. So I'm going to pick that price and kind of go to about the highest price before MACD peaked the second time after it went down below 0. Now, I'm going to make an argument that you're going to agree with me on because it's objective and not subjective. This MACD is not setting a new high, okay, while price is setting a new high. In other words, this area right here is higher than this area, and this area right here is lower than this. You're setting a new high price point that is not confirmed by MACD. MACD does not support this price point. And when that happens, I believe the exact words that Dr. Alexander Elder uses is, at this point, you are breaking, this is a bearish divergence, and you are breaking the backs of the bulls. And he calls it he calls it the most powerful signal in all technical analysis. Okay. And what happened right after that, we had a nice, pretty good correction in this particular stock. So that's the third way that you can go about by looking at that. Not too long after that, we had a sell signal that was backed by that divergence, and the stock sold off for a little bit. So those are kind of three common methodologies. Just to recap. Okay, we talked about overbought, oversold. We talked about this. Trend identification, overbought, oversold readings, divergence. Very, very simple things to kind of look at. Very objective things to kind of look at. And I do like the fact that it's objective, right? So like if we come in here, here we go. I actually have his exact quote here. Divergences are the most powerful signal in all of technical analysis. I'm new trading for a living. That's kind of where I pulled that quote from. So in any case. All right. Let's kind of talk a little bit about what we're going to talk about. We're talking about MACD. But hopefully that is a little bit helpful for you. But the reason I like technical analysis is because it's objective, right? I'm not trying to determine what the next interest rate is. Adjustments are going to be, or what the Fed is going to do, or if they're going to print money because we're in a pandemic, or if they're going to cut interest rates because there's a real estate crisis, or whatever the current topic of the day is. What we're doing is we're looking at price and we're making a study of price. That doesn't make it automatically always correct. Not at all, right? If I basically, but because it's objective, I can actually go in here and say, well, okay, just like we were doing a minute ago, if I bought here and I sold here, does that make sense? Is that a profitable trade? And the answer would be, yeah, I'm buying it higher. If I bought here and sold here, would that be a profitable trade? Yeah. If I sold here and bought here, that probably wouldn't have worked out too well. And you will have losing trades in a stock. But you can kind of go through and objectively analyze and say, okay, well, if I sold here and I bought here. How did that work? You can kind of take these all into account and say, well, how does MACD work on TSM, Greg's pick, right? And by doing that, we can kind of get an idea of what our business plan looks like. In other words, we can see exactly kind of how many wins we had, how many losers we had. We can see what our drawdowns look like. We can see if it works well, right? And so from a perspective of right now, I've been kind of talking for, I don't know, let's see, I'm trying to just do a little bit of math. Never mind, 7 minutes plus 30 minutes, I guess. And all we've talked about is MACD, right? We can go as deep into this indicator now. But what I want to know is if I'm going to trade TSM with this, is this the best indicator to use, or the better indicators I use? What indicators should I be using? And because this is all objective, I can actually ask the computer that question. I can say, hey, MetaStock, how well does MACD work on this? How does that compare to, maybe stochastics, or the stochastic RSI, or the total trading system? How does that work? And before I ever risk $1, I can kind of start to structure or invest any time in learning about the methodology, which I think is important to do. But before I spend that time learning about MACD, I can figure out if this even makes sense. Does that make sense to you? Is that logical? So let's kind of show you how that works. I'm going to go ahead and click on the Tower Console right here. And I'm going to go to the system tester, which is what we call our system tester. We're very creative in our naming conventions. But what I'm going to do is I'm just going to select kind of, do I have some favorites already set up? Not in here. Okay. I'm going to set up just some systems. We'll do Bollinger Bands. I'm going to select the ones because you can create your own methodologies too. And there's a lot of them that you can kind of get in other different ways. I'm going to basically select a whole bunch of them that I know are included in MetaStock, and I'm going to try and avoid ones that say optimized. And the reason I'm going to avoid optimized is it just takes a little bit more time to run. And without going through this whole, let's get the Ichimoku ones though. Without going through the whole list, I'm going to grab a couple more here that I know are all included in MetaStock, these performance systems. What I want to do is say, okay, well, if I started trading TSM, let's say 2 years ago or 1 year ago, or I could even start in the 1980 with the data that we offer from basically Reuters or London Stock Exchange Group. We could go back to the 1980s one. But if I went back and I said, okay, using these indicators, which ones are most effective with trading TSM, it will give us an answer. And it'll tell us exactly what our drawdowns look like and exactly what our win-loss ratios are. From that perspective, I can go in and actually get a good idea of how that works. Okay, so I'm going to go ahead and basically we'll start this. I'm going to throw in the instrument TSM up here, and we'll just test TSM. And we're going to go back. I'm going to go back just to kind of limit the time that it takes to run through the test. I'm going to go back about 252 periods, which is about a year. Okay. For trade options, I'm going to have it basically start with, I'm going to have it start with $10,000. I'm going to trade 75% of the available equity for trading. Okay. For broker, I'm not going to put any commissions in and that kind of stuff. Not a lot of people pay commissions on stock quotes anymore, or on U.S. stock trades. But you can change that. I am leaving it on realistic market prices, which just means if it gets a MACD signal today, like right here, it would wait until the next day to trade because it's not sure if that signal came in towards the end of the day or towards the first of the day. It doesn't know where it happened unless you're doing intraday. And so the most realistic way to trade that would be either to buy at the close or buy at the open of the next day, which is what realistic sets it to. Okay, so I'm going to go ahead and start this as a system test. It's going to run, maybe I select some optimized systems after all because it's going to run 1990 tests. It is kind of chunking through them pretty quickly, but while it runs through it, I do kind of just like want to talk a little bit. It's almost done. It's about 50% done about the system tester because I think there is definitely an optimized system in here somewhere, which just takes different numbers. So like, where MACD, we were talking about 26 and 12. I might use 25 and 13 and just see what works well through kind of an optimization that way. But one of the things that you can do with our system tester, it is done. I'm going to go ahead and click on the report here. Is you can do just a single stock, which we're doing with TSM right now. You can also do a group of stocks. If I want to do the whole S&P 500, I could. If I want to do all the optional stocks, I could. That kind of stuff. And I can, and sometimes we show that and sometimes we don't. It does kind of take a little bit longer if you throw 500 stocks at it. Sometimes we'll do a small group. But for today, I just want to kind of let you know that that functionality exists. We'll talk just about TSM. So going with TSM, we went back about a year. These systems that are red did not work over the course of the last year. They produced negative profit, which is not something we want to do, right? These systems over here are the ones that worked kind of the best over the last year. Okay. The first one is the stochastic RSI. If I kind of look at kind of the percentage gain here, on that particular thing, it had on this particular stock, TSM, made about 58%. The best trading profit was 58. The worst, it did have about 22 trades. Okay, about 14 of those were winners and 8 of those were losers. Okay, our next best system was the PS trading system #1. You can kind of get a view for the rules. Now, sometimes I'll spend a lot of time talking about finding the method that works well for you. You know, find stuff that has low drawdowns, that are trading. Maybe I might take this ETS system because it didn't make as much money. It was 40 instead of 58%, but it only traded 4 times in that year. And we're not going to go into kind of quite that detail, just because we don't have. Well, I want to be respectful of the time I've been given here. Okay, but let's say that we did find something that we like. Okay, if I come onto this PS stochastic RSI, I'm going to go ahead and click on View there. I can get a complete rundown of how many total trades there were, how many of those were profitable, what the average win size was, how many were unprofitable, what the average lose is, what the highest lose, how many losses we took in a row. We can get a lot of really, really good information. We can look at that in an equity format so we can see what our equity line would have looked like over time. And what we want to do is we want to find something that works well for what we want to do. And that could be very, very different depending on how much time you have to trade. All that kind of stuff really plays into this. But let's see, I'm going to go ahead and plot this on the chart. Let's say that we find something that we like. This is the stochastic RSI system. I know from experience, actually, that this was put together by Tushar Shandy and Stanley Kroll, just because there's actually a system that comes up quite a bit. But if I go ahead and kind of put that on the chart here, you'll be able to see that equity line right on top of the TSM chart. And if I still like it, so I can see every time that it took a trade, it was pretty active on kind of our view. If I still like it, I can kind of go in. I can go to the expert advisor, which is what puts the buy signals on us. I can say, hey, go to that stochastic RSI system. Go ahead and attach that to the chart. And I can go to the expert advisor, just like we did with the MACD. And it'll tell us, okay, the system was created by Stanley Kroll and Tushar Shandy. Here's what it combines a stochastic RSI. Where's the commentary? View, commentary. I'm not going to spend too much time right here. Tushar Shandy and Stanley Kroll developed the stochastic RSI indicator. One of the problems with the RSI as an overbought oversold indicator is that due to the built-in smoothing, it may take a long time before an extreme is ever reached. This forces us to miss out on significant trading opportunities, applying a stochastic process. So it kind of gives you an idea of what the indicator is and what it does. We can go in and we can kind of read more about the stochastic and the RSI and kind of how they work. Gives us some advice, as with all overbought oversold indicators, even though it can be really good at capturing profits and a large number of trades, you should use stops. Stop loss orders should be used to prevent the few failing trades from removing all of your profits. So with system testing, it allows us to go through, and I think we just tested about 300 different ideas. It allows us to go in and say, well, what works? In this case with TSM, stochastic RSI worked really well. Now, I would encourage you to go in and learn about these indicators. Look at the buy and sell signals. Look at the indicator itself and kind of use that as kind of, okay, I want to learn about the markets because I think learning and understanding why you're trading is very helpful in your discipline. But it also helps shortcut that learning process because there's hundreds and hundreds and hundreds of indicators. We just tested, what, 200-300 ideas. How do I understand what works well for me, for how I want to trade with my risk tolerances? And a good shortcut to that is testing. So the other thing I love about this is if you decide you like any of the systems in MetaStock, in TSM you might not have a signal today, but I can go in and easily run a scan against the entire market. Whether that market you didn't have a signal, right now you'd be short actually on TSM. But you can, once you find something that works well for you, you can scan the markets for it. Whether that market for you, maybe you're here in the US, maybe you're joining us from internationally. There's so many different markets that we cover, over 300 different exchanges. You can get the data that you're interested in. So I think it's tools like this, and we just kind of briefly covered the surface. But I think it's tools like this that have helped us win best software in our prize category for 31 years in a row, right? What I'd like to do in terms of kind of just talk to you a little bit about the pricing and kind of helping you get started and that kind of stuff. So 31 years in a row, it's been rated #1. Now, this is an award that's given out by the readers of Stocks and Commodities magazine, not by the editors. We have a great relationship with Stocks and Commodities. They've worked with us pretty closely over the last few years. We really appreciated what they're doing and what they help us with. But this isn't their award. This is everybody that's subscribed to the Stocks and Commodities participates in a Reader's Choice Award, as long as they fill out the survey. And so for 31 years in a row, we've been rated the #1. So in terms of pricing, we have 2 different versions that are available for MetaStock. We have what we call the MetaStock RT, which is our real-time version of MetaStock. Not only does it come with like the testing and the scanning and the expert advisor and all the systems that I showed you, comes with, hey Dan, it's good to see you. Comes with a ton of other functionality. Comes with actually a news platform. I don't have it on this side. I thought I had a few more bullets. It comes with one of the best news platforms on the planet. If you're familiar with Reuters, several years ago, Reuters spent over $1 billion developing a new news platform that they sell to brokers and banks for way more than $300 a month without MetaStock. They charge actually about $400 a month for just MetaStock. That's included. You get really, really good news, fundamentals, all that stuff is included. But you also get MetaStock. So that's $265 a month. That's our real-time version. You get really probably one of the best data providers on earth. Their main competitor, just to kind of put some perspective on it, is Bloomberg. And Bloomberg costs about $1,300. I think it's actually $1,800 per month per person. And they go in and sell banks and institutions and that. We also have an end-of-day version. Our end-of-day version of MetaStock is the one that's been rated #1 for 31 years in a row. We call it MetaStock DC. It's only $70 per month. It allows you to go in and do everything I showed you today on a daily basis. Do your testing, do your scanning, get your expert advisors, all that stuff's included. And it's only $69 per month. So the offer that we're going to do for you today is basically just if you buy a month, we're going to give you a second and a third month for free. So even if you do the real-time version, that's about $269. It's going to be less than $100 a month to try it. Okay. If you do the end-of-day version, it's going to be $23 a month to try it. And right here, at least in Utah, it's August 14th. So that means you'll be running it. That'd be funny if I read the date wrong, though. They'd be like, why is it August 15th in Utah? No, here it's August 14th. That means you'll be running it September, October, till almost Thanksgiving, November 14th, if you start a trial today. For about $23, you'll be able to try it. You'll be able to see why it's rated #1. And we want you to keep it. You know, we put out kind of a low-risk trial offer out there so you can kind of get started, start using it, start using the scanner. I personally wouldn't trade without it. So that includes MetaStock 19. That includes data for the region that you're interested in. That probably for most of you be all of North and South America. We also have Europe, Middle East, Africa, Asia Pacific. Those are kind of different regions that you can go with. We'll also, as part of that, we'll actually set you up for what we call a white glove installation appointment. I'd recommend you install it. It's actually really easy to install anyway. But some people call you and they'll spend up to a couple hours with you, kind of walking you through the program, showing you how to kind of use testing if that's what you're interested in, or scanning, or just kind of giving you a really good tour of the system. We'll also give you Unleash the Power of MetaStock. The Unleash the Power of MetaStock is normally a $99 value. We'll throw that in. It's a home study course. During that, we go and kind of talk about some of our favorite systems and how to use them. And all of that's $69 for 3 months of that. So our real goal is to kind of get you using it. Our average employee here tenure is like about 14 years. It's crazy because people really like it here, but our customers really like the product as well. I think our average customer length right now is upwards of 10 plus years. Like people that kind of start using it and they start using it and it helps them make more money. Of course, they're going to keep paying for it. And of course, if it's not, they're not, right? Like, so we really appreciate all those people that have been with us for decades and decades and decades. And there's a lot of them. But my feeling is if you go ahead and try to spend $69 or the $265 if you really want to try real time and all the news and the whole shebang, during that 3 months, you'll be able to go through the training that's provided. You'll be able to have unlimited access to our support. And if it's helpful for you, be happy to keep it. If it's not helpful for you, you'll be happy to not have a commitment to keep it. And there's no commitment to go on. So $70, try it out. If you have questions, if you want to get more information, you can give us a call, 800-882-3040. You can go to metastock.com/saleschat. If you and they can answer any questions you've got. It's a big program. We've been working on it for decades. You can also go to metastock.com/festival3for1. And you can also sign up for that subscription right there.